Right, time now to get the latest business news with Charles Belgram. Charles, we're going to start with a look at the markets and how they're dealing with trade tensions once again this Thursday.
Absolutely, Eve. In Wednesday's session, stocks fell because of concerns over the U.S.-China trade war. As a reminder, the U.S. just announced it is looking to implement additional tariffs of $200 million worth of Chinese goods. Well, investors this Thursday appear to have shrugged off some of these worries, at least temporarily. As you can see, the European Open mostly in the green, the FTSE in London up 0.2%, the CAC 40 in Paris up 0.2%, and the DAX in Frankfurt up 0.40%. In Asia's main marketplaces, investors reacted similarly. As you can see, the Shanghai Composite up 2.17%, and the Hang Seng in Hong Kong up almost 1%. With the Nikkei in Tokyo up 1.17%. Well, France 24 spoke about this to Catherine Yung of Fidelity Investments in Hong Kong, who told us that while stocks are on the rise again, the word of the day remains uncertainty.
Swiss banks coming out yesterday saying that they need to revise down their global GDP forecast because of the trade-related issues. Meanwhile, one of the big US brokers or banks said that the $200 billion proposed tariffs are unlikely to come through. What does seem to be unanimous across the board, though, is this uncertainty and it not really being priced in fully into markets, especially the US market.
The trade dispute and the uncertainty that ensues also appears to have had an effect on the commodity markets, especially oil. On Wednesday, oil prices saw their biggest one-day decline since February 2016. Brent crude sank by close to 7%. Also contributing to this is the factor that the announcement by Libya's state oil company that it was reopening 4 export terminals, which they regained control of, something which would increase global supply. Well, let's see how the prices are doing this hour. They've settled and slightly recovered. You can see the Brent crude around $74 a barrel and the WTI around $70 a barrel. Well, dozens of Ryanair flights have been canceled as Irish pilots go on strike Thursday, the first major organized labor action since the low-cost carrier decided to officially recognize unions. This is the beginning of a summer of planned walkouts by both pilots and cabin crew across Europe, as workers push for better pay and working conditions, while our own Brian Air Quinn has the controls.
The first bump in what could be a turbulent summer for Ryanair, as Irish pilots go on strike Thursday for better working conditions. Some 30 flights cancelled after last-minute talks between labor and management ended Wednesday without agreement. So far, only flights between Ireland and the UK are affected, but more labor action is coming, with employees in Portugal, Belgium, Spain, and Italy planning strikes in late July. On July 5th, cabin and ground crew across Europe issued a list of 34 demands. Among them, predictable working hours, a fair living wage with seniority pay, a universal pension scheme, and an end to onboard sales practices that see them subject to disciplinary procedures if they fall short of targets. Crew are also dissatisfied with their hiring arrangement, one that often sees them employed by third-party agencies and requires them to receive their pay into Irish bank accounts. Unions say the company is abusing its transnational nature.
We're transnational for some things and we're Irish for other things, leaving the cabin crew in a limbo as what social security means, with contract means.
Ryanair flies in 37 countries and carried 130 million passengers last year. In December, it changed course with a decision to officially recognize unions for the first time in its more than 3 decades of existence, after scheduling errors left the airline with a severe pilot shortage, disrupting service and giving labor the upper hand.
So let's take a look at the other business stories making headlines this Thursday. The battle for UK TV group Sky continues to rage as Comcast raised its bid, valuing the entertainment giant at $34 billion. This follows another bid by 21st Century Fox on Wednesday, which valued Sky at around $32 billion. The battle also includes Disney and represents a consolidation wave amongst TV groups to combat the likes of Netflix and Amazon. Founder of U.S. pizza chain Papa John's, John Schnatter, has resigned as chairman of the board, this after admitting and apologizing for using the N-word during a conference call in May. The call was a role-playing exercise with a PR firm to prevent public relations troubles. A new chairman will be appointed in the coming weeks. And in a bid to rebuild trust on its platform, Twitter will begin to remove tens of millions of suspicious accounts this Thursday. The aim is to crack down on users inflating their follower numbers on Twitter by using fake accounts. This in order to appear to have social influence. Well, beginning this Thursday, many users will see their follower numbers fall. Twitter expects the total combined follower count to be reduced by 6%. I don't know about you, but all my Twitter followers, all 10 of them are real people. So
You know
I'm
them all
safe.
personally, Charles. I think I'm pretty safe as well, I have to say. Charles Bellegrain, thanks a lot for that business update.